Good morning, Paul Georgie from Allendale. It's Monday, November 25th. It's Thanksgiving week this week, so trade will likely be a little less active than we've seen in recent weeks, as some traders will be taking off for the Thanksgiving holiday and making a week of it. So that could add some more volatility. This morning we've got profit taking in soybeans after the big rally that we've seen last week. Corn quiet and wheat a little higher. We're getting some strength in the wheat as there is some export business around where you've got South Korea looking for some optional origin wheat. We've also got some export business. Israel is looking for some corn, 100,000 tons of optional origin corn. So that's giving some strength there. The news over the weekend of the Iran deal was considered a bit supportive to some of the product and grain markets here, that they may be in doing some buying of corn and possibly wheat. That, however, doesn't mean they're going to come to the U.S. and buy it. It just means that we're opening up the borders for some business there, and could be a little bit supportive as trade tries to find reasons for finding some strength in this corn and wheat markets. The other news, Russia is talking about their wheat prices are getting too high, that they will need to make some adjustments in their pricing. So that's going to be watched here very closely. South American weather continues to be favorable for producing a crop down there. Planting still a little bit behind in Argentina. Brazil's planting seems to be in line with normal. We did have a CFTC report on Friday. It showed that managed funds increased their short positions in corn by about 7,000 contracts and increased their short positions in wheat by about 8,000 contracts. In contrast to that, they raised their soybean long positions by about 8,500 contracts. So some of the reasons for this strength that we've seen in that market last week. Expect some choppy trade this week in the grain markets. Some are looking at the historical tendencies that soybeans rally after Thanksgiving, so that could be part of some of the strength that we've seen last week in the soybeans. Talk of Brazil slowing down their exports, export sales here for the next several months. We think that a lot of the strength really came out of the technical side of the market. Once that certain resistance areas were taken out, we've seen a lot of traders jump on the move, and that's a main reason for that unexpected strength in the soybean complex last Friday. In the livestock trade, we did have a cattle on feed report on Friday. Pretty much in line. Traders are trying to call it a little bit bearish with the placement numbers at 110. That was higher than what the trade average was, but in general, not a big surprise. The cattle futures were under a lot of pressure going into this report, so it's hard to call it bearish or expecting a lot of pressure because of the report. With the oversold condition in the livestock markets, wouldn't be surprised to see this market open lower and then try to find some strength, as there is some short covering ahead of the Thursday holiday and the short trading day on Friday. We had beef cutout values improve on Friday, up 34 cents in choice, select up 39 cents. We had the CME feeder index at 164.85. That was up just 3 points on Friday. In the pork complex, cutout values there were lower, down 34 cents. Expect a short slaughter week this week. Hog supplies and weights continue to be very heavy. And we have the December futures contracts at about $3 premium to the cash index right now. So there may be some adjustments there going into this very historically a very volatile week during the Thanksgiving time period. So a lot of reasons to stay in touch with Allendale's research. We'll keep you informed. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning.